Oh boy, here we go again. Earnings are out. FOMC is tomorrow. We got more big earnings after the close. Man, oh man, there's a lot of moving pieces going into tomorrow's trading session. I'm sure some traders, they don't even dare trade tomorrow. But don't you worry. I got a great plan to help you guys make some money on what is surely going to be a wacky Wednesday trading session tomorrow. As always, I'm going to cover all my favorite trades in the video tonight that you guys have a game plan to make some money on Wednesday. Before we jump in though and get a very important video going tonight, before we get our hands dirty on these charts, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoy these videos tonight, do me a favor, as always, hit that like button. Give me a shout out down in the comments section below. Thank you so much for tuning in, supporting the channel. But enough of the intro. We got Wednesday to prep for. Wacky Wednesday. And I'm sure there are probably some traders who don't dare touch the buy or sell buttons for tomorrow. But not to worry. I got a pretty good plan here for you guys to make some money tomorrow. Now, starting off first here on the 60-minute charts on the S&P and SPY, the Nasdaq and the QQQs, I like to use these 60-minute time frames to plan my trades for the following day. And then later on in the video tonight, we're going to drill down to some faster time frames, some tick charts, and we'll talk about how to structure the best entry triggers and entry signals to capitalize on those opportunities here for tomorrow. So starting off first on the higher time frame on the S&P. S&P is pretty straightforward right now. We get a bull market overall. We've pulled back, and now we're retesting that high. If you've watched my videos so far this week, you know this is mission accomplished. At this point, there's one of two scenarios. Buyers are trying to break out to new highs. Buyers looking for breakouts. I have three different patterns I'm looking for, two buys and one short on that breakout going higher. You're going to love those three setups. We'll talk about that more in the video tonight. But at the same time too, right, there's no guarantee this thing breaks out and runs higher. We may run into a bunch of profit taking, and we may get a reversal all the way back down to take out that low. There is one pattern setup, one specific setup that every seller should have on their radar tomorrow. We'll talk about that one short setup to capitalize on that double top as well. So I've got long trades, I got short trades I'm tracking on the E-mini S&P. Now, let's kick this up a couple notches because the Nasdaq is clearly in a very different situation. Now, remember, the Nasdaq overall is still very bullish, right? We're still very bullish overall. Buyers got the wind knocked out of them. They got punched in the gut last week. We heard from that Taiwan semiconductor, right, and sent the prices tumbling. The buyers right now have a pretty simple plan, right? The buyers are trying to climb their way out of that pullback, and they're trying to retest this high. And so buyers at this point have a lot of opportunity. But I'll tell you tonight, if you're a buyer in the Nasdaq, there is one key setup, one key entry pattern that every buyer needs to know for tomorrow. I'm going to talk about more of that as we go deeper because we're sitting right at resistance, and there could be a ton of bull traps waiting up above here as well to retest that level. So I got some long trades, and you know I got some short trades on my radar list here for the Nasdaq and the QQQs. Now, I want to go over all these trades here with you guys. Before we jump in, though, and get down to those tick charts and talk about specific entry tactics, let's double check the news for tomorrow. It's not your average. It's not your average Wednesday. There are three things that you want to keep on your list for tomorrow. One, of course, is that new home sales number at 10 o'clock Eastern time. Anytime we have major news at 10 a.m., I want to be paying attention at my desk. That's one catalyst we're watching for tomorrow. The second one, of course, everyone knows about this, the FOMC announcement at 2 o'clock and the press conference at 2:30 Eastern time. I think everybody is assuming they're going to raise rates by 0.25% tomorrow afternoon. Remember, news is noise. I don't care what the news actually is. We'll trade the reaction. So it doesn't make any sense to speculate about what they're going to raise or going to cut. It doesn't matter. We'll trade the reaction to that. And the third thing, of course, right? Third thing is we got some more big earnings coming tomorrow afternoon, really tomorrow morning, but really the big one is tomorrow afternoon. We just heard from Microsoft and Alphabet. Google, their earnings are out. Tomorrow afternoon, we have the big Meta earnings coming out after the close. There's obviously some pretty big numbers coming out before the open. I mean, AT&T, Boeing, those are big numbers, but they definitely are not nearly as big as the market cap of Meta. Remember, like I mentioned last night, it's very easy to overthink the earnings reports we're going to have this week. Stay out of the weeds. Don't worry about the numbers themselves. Like I mentioned earlier, the numbers don't matter. The news is noise. All that matters is the market's reaction. So focus on the chart. The chart is the only thing that's not lying to you out there, especially in the world that we live in right now. There will be some curveballs. There will definitely be some surprises in the wake of those earnings reports, but not to worry. Tomorrow morning in our trade room, we'll make adjustments and we'll roll with whatever we get out of the market. So keep those three things on your radar for tomorrow. New home sales at 10 o'clock. Be careful tomorrow afternoon going into the FOMC announcement, and of course those big earnings right tomorrow night after the close. Now back to our charts, because of course the money is made on the charts. Why don't we go over all my favorite trades now? We'll start off on the S&P and the SPY, and then we'll go over to the Nasdaq and the QQQs. We're going to cover them all here tonight, so get comfortable, take some notes. If you got questions, drop questions down in the comment section below. As I mentioned in the introduction, the S&P is a pretty straightforward game plan, right? It's a pretty straightforward situation. It's a very strong run up. Anytime we see a strong move in one direction, we're expecting a deep pullback and a retest of that high. Right now, we wait and see. Do we see a breakout, right? Or do we see a reversal going lower, all right? What you want to be thinking about when it comes to these situations is that almost always, whenever we see a strong move, pull back, we're going to break out, pull back, right? Almost every time we see a strong move up, we see a pullback, a retest, a breakout, and what? A breakout pullback, right? It happens all the time. Strong move up, pull back, retest the high. We see a breakout, and what do we get? A breakout pullback, right? So this is the same kind of pattern that we should be looking for if we go higher, right? So we're looking at this pullback, this retest, looking for the breakout, right? The breakout, and then the what? The breakout pullback. Now, knowing that kind of dance in which we expect to see tomorrow, there are going to be trades we can take on the way up, long trades. There'll be trades we can take on the way down, short trades, reversal trades. And probably my favorite out of all of them is that breakout pullback trade. So that's why I said earlier, there are three different types of setups that we want to be prepared for here tomorrow. And again, like I mentioned earlier, I will certainly be talking about how to short off this high, right? Because tomorrow's big news day, right? There's no guarantee this thing goes higher. Anybody who tells you they know what's going to come tomorrow is either naive and not experienced enough, or they're lying to themselves. So we want to make sure we game plan both of those scenarios. Now, let's dive down now into our tick charts. I like to use tick charts because tick charts make everything easier. Make finding support and resistance easier, entry patterns easier, trade management easier. Everything's easier on tick charts. This is a 7,000 tick chart, upper left-hand corner, and this is the 21 EMA if you're watching for the first time right now. Let me clean this up a little bit, just going to know what we have in front of us. Now, what's the most important factor we see right now on the E-mini, on the tick chart? It's a very strong run up. And what did we just talk about? Anytime we see a strong move in one direction, what do we expect? A pullback and a retest of that high. Do they keep it going for a breakout? Do they pull back to a breakout pullback? Okay, so it's a very similar but a much smaller variation, right, of the same larger pattern on the 60-minute. Now, if you're a student of mine, you probably know what I'm going to say right now. As we go higher, right, as we go higher, if this market begins to race and run higher as it snaps and blasts or breakouts that high here right now, there is one entry pattern that I want to look for, and that is called a bear trap or a trap setup, like you guys are learning in our free trading classes, right? In our free trading classes, I want to say it's day number 5 in that video series, either 5 or 6. You can correct me if I'm wrong in the comment section, but you'll learn about traps, right? Traps are the best way to buy as low as you can as the market explodes or tries to break out higher. So as we're trying to break out higher, this one pattern I'm looking for, and that is a bear trap. Now notice how I draw this. It's a higher high in price and an entry right below that prior swing. Now, once we start getting up in the stratosphere, once we start getting up, and we'll talk more about finding those levels tomorrow in the trade room. Once we know more about the breakout looks, then we'll know more about where that level is. But how do I short something like this, right? How would I short off the high right now? Well, what's the problem? Momentum, right? There's a lot of bullish momentum right now. So if I want to get in during that pullback, right? I would love to get short during that pullback. There's one type of entry pattern. It's called a crown reversal. You guys know these, right? Because in the free trading course, I teach you guys about what are called failures and traps. If you were to put together a failure pattern and a trap pattern, you get a crown reversal. Buyers try once to keep it going higher. Buyers try twice to keep it going higher. There's your bull trap in combination with your failure. All right, now look how I draw this pattern. All right, it's a lower low in price with a bull trap above that high. Okay, what will happen is it'll run up. The buyers will try to buy it once. They won't be successful to keep it going higher. They'll pull back again and they'll try it again. Then you look for that nice, big, juicy entry signal we talk about in the free trading course. And that's your signal, right, to short that thing during that pullback. Again, there are probably 100 examples of traps and failures, right, inside of that free trading course, which reminds me, I know that most of you guys have taken the free classes. You've learned how to combine these setups to make money consistently each day. But listen, if you're not making consistent money right now, if you haven't learned these setups, I'll put a link up here for you in the upper right hand corner for our free trading courses. Grab that link, take that free class, because the strategy I teach in that short video series will teach you a stupidly simple trick that we use every morning in our trade room to know where the best winning trades are going to be each day. And most importantly, I'll teach you 4 of my favorite entry patterns to help kickstart you making money each day. If you're missing the best trades right now, the markets are way too good not to be making money right now. So grab that link, take that free trading class, and don't forget, right, I'll put all the important links in the description of the video tonight, just in case you can't get the pop-up in the upper right-hand corner. Grab that link in the description. All right, so a quick recap here again. If we do end up running higher, and again, we got big earnings coming out this afternoon, big news tomorrow. If we keep on blasting, what's the situation? It's as we go higher, right? It's that bear trap. And then as we start, and again, unfortunately, I don't have enough information yet to give us that end of the road up there yet. Once we see what the breakout looks like, we'll start looking for what I call 1, 2, 3 moves, right? Tomorrow morning in our trade. If you're a member of our trade room, you know what I'm talking about, right? So once we get up there, then we start thinking, okay, let's not buy high. Let's see if these buyers will try a couple times and see if we can get lucky and get that crown reversal back down again. Okay, those are the 2 we talked about so far. One more, and don't forget, I will talk about the short. I will talk about that short here in a moment. Bear with me on this. Patience. We'll get to the good stuff later on in the video. Now, oftentimes, what was resistance, right, becomes support, right? In fact, it happens a lot of times, right? What is resistance becomes support. So what will oftentimes happen is now we'll go out and we'll start looking, okay, prior highs right there. What I also like to do is I'll draw a trend line, right, off these highs like that. I'll bring it down off these lows, and I'll find channels, right? See how that kind of creates this big, big channel there, okay? So think about drawing a channel off the highs, right? Mark off the highs, down to that low. That will give you that channel low. And then think about where this prior high was. All of this area is basically a prior high, right? So that's going to be the general idea of how we find the zone to then begin looking to buy, okay? Now, at this point, remember, anytime we see a strong move in one direction, what do we expect? We expect a pullback and what? And a retest of that level. So that's where buyers are trying to go. But think about this now. Think about this. If this market collapses off the high, that will feel pretty bearish, right? That momentum will be quite strong for the bears. In last night's video, we talked about how in my trade room, I'm always asking these two important questions. How is my location and how is my momentum? If you learn to answer these correctly, you'll know how to stay out of trouble and you'll know how to make consistent money. Consistency is the key. So how is location? It's a great location, right? It's a support level in an overall bull market. Mwah, beautiful location, but that's all that's good, right? Momentum is not going to be as good, right? Because when we get these deep pullbacks like this, what's going to happen? Well, anytime we see a strong move down like this, they're going to want to what? Retest that low. They're going to want to keep it going lower, right? That's why momentum is so important. So if I want to be a buyer at support, but I'm concerned about the bearish momentum right now, what would I do? I would try to trap these sellers in and use their stops as fuel. Okay, I learned this trick from one of my first mentors like a gajillion years ago, back when I was a kid. He would always say, look for a situation where everyone is a buyer, right? Think about it. Buyers are going to want to buy off that pullback area, right? Buyers are going to want to buy low. Sellers, if we can get those sellers to start shorting down here, right? Remember, bull market, trying to retest the high. If I can get those bears to get short, now think about where their pain is, right? Think about where their stops are. Think about where those sellers become who? Become buyers, right? They got to buy, right? They got to buy their way out of that loss. So these are those situations where everybody is a buyer. Does that make sense? Right? The buyers are buying because they're buying low. But more importantly, the sellers become buyers when we use what I call a failure pattern, right? This would be what we call a two-try failure pattern. You guys are learning this in that free trading course, right? And the failure pattern will want to snap back up and retest the high, right? Now, if we're really lucky on this, what will happen is we'll get that failure pattern. The price will squeeze and run higher. And right before we punch our ticket back at that high, we'll get another one of those bear traps. Why? Because bear traps, you guys are quickly finding out, traps are by far my favorite way to trade because it's going to get you in as low as you can, right? So as we're going higher, bear trap. Remember, strong move, higher high in price, trap low, right? Then bull trap, right off the high, buyers once, buyers twice, trap high, sell as high as I possibly can, right? That way we maximize our return on the way down, and then we trap the bears in, right? Bears try once, bears try twice. Everyone is a buyer in that situation, right? Buyers are buying low. The bears become buyers and they get their bell rung and stopped out. And as it tries to make a run back to retest the high, what do? We buy as low as we can. Right? We buy as low as we can. Why? Because we're trying to go back to the high. We're so close at that point. That's where traps come in, right? Buy as low as you can. Higher high in price, trap low. Okay? So these are the three basic, well, I guess four, right? When you conclude that trap on the way up. But I'll tell you right now, learn this dance, right? The traps on the way up, the crown reversals. Oh, one last thing too. Remember, when you're going, you can do whatever you want. But in my world, when I'm going with the trend, I'm going full size positions. When I'm going against the trend, I'm going half size, right? I'm going quarter size. I'll let you make the decision as far as how comfortable you are, but I always try to tell my students in trade room, go big on the trades that are going with momentum because those are the ones you're more likely to get lucky on, right? Those are the ones that are more likely to really run and run and run. The counter trend trades are great, but you don't want to be, again, if it was me doing it, right, it's a smaller size. It's a half size. It's a quarter size position. If you don't know what that means, definitely get in my trade room. I will walk you through how to do that with whatever account size you're trading with. Okay, so that's the dance I'm looking for if we go higher. Now, let's kick this up a couple notches, right? Because again, there's no guarantee this thing slingshots and runs higher, right? It seems like they want to do it right now. Earnings came out pretty good this afternoon, but who the hell knows? So at this point, right, if we retest this high, how do we short this thing off the high? Very good question. Let's go talk about that now on the Nasdaq, because I think you'll see tonight the Nasdaq is very different, but I think you'll find that the game plan is quite similar. All right, let's go to the NASDAQ here right now. Now, I mentioned earlier, okay, on the 60-minute chart on the NASDAQ, we're very bullish overall, but that is a lot of bear momentum right there, right? Now, as I mentioned earlier, we pretty much know where the buyers want to go, right? One of the good things about the scenario right now is the buyers have one thing on their mind. They want to squeeze these bears and run back up to retest the high, right? At some point in the near future, we're probably going to be back at that 16,062 and 3/4 here on the NASDAQ. It may not be tomorrow. It may not be this week, right? We got a bunch of news this week. It's tough to tell when that will happen, but that is the objective. It's nothing's guaranteed, but it's almost a certainty at some point we're going to end up back at that high here. What's our problem though, right? Why can't I just buy right now, right? If we think there's a good chance it goes back up, why can't we buy right now? Well, because of all of that momentum, right? Now remember, anytime we see a strong move down like this, we have to assume who is waiting up here? Sellers, right? So as it goes up, we have to assume that once it gets high enough, there'll be enough bears up there to whack this thing right back down again. So we have to keep that in the back of our mind. We have to protect ourselves and not get too aggressive as the market rips higher. Remember, there's no free lunch. Right? There's no free lunch. Whenever we have a lot of potential profit, momentum will be a problem. Whenever momentum is good, there's not a lot of profit, right? It's always that balancing act in trading. So there's a lot of profit potential here for the buyers, but we have to be careful not to buy what? Not to buy too high. Right? As we're going higher, we don't want to buy too high because we're potentially walking into some shots, right? Going lower here. So what do you think? If you've been listening so far, you probably know that one entry pattern that every buyer needs to have on their radar tomorrow, and that is a bull trap. A bear trap, excuse me, right? You see how easy it is to confuse them. As we go higher, think about it, right? As we go higher, bears keep trying to shoot this thing lower. In these situations, in most of these situations, the best entry is going to come underneath a prior swing. All right. Now, obviously, I'm simply illustrating this right now, but imagine as we go up, bears are shooting this thing back lower. As we go up, we're not buying high, right? We're not buying it high. We're waiting for those bears to shoot this thing lower because, again, they're trying to short this thing to try to run this thing back down to retest the low. When those bears begin to commit, now we got them, right? Now we want to buy as low as we can with that trap, all right? Also, too, if those buyers were to fail and we roll all the way back down to retest that low, this now becomes a double bottom and it's a very attractive bounce reversal off of that low. We'll cover that a bit later on in the video here tonight. Lots of buying opportunities right now on the NASDAQ. Let's go to the tick chart now, okay, on the tick chart. So again, we use tick charts to structure the entries. They're much easier to time entries on tick charts. Now, what do we see right now on the tick chart? This is a 5,000 tick chart on the NASDAQ. It's a bull market into a trading range. Now, if you're taking my free trading classes, you know that ranges love to what? They love to rotate. Right? They rotate back and forth and back and forth. It's what causes a range. They go up, they go down, and then this is what we call rotation off the low. We rotate off the low. Now, in a lot of cases, this will punch and really begin to rip. Now, we're not exactly a bull, we're overall bullish. We're not totally quite bullish. We're not as bullish as the S&P right now. Let's put it that way, right? So the odds are not as good as that rip. But what do you think, right? What do you think? What do you think about those three entry patterns I mentioned before on the S&P? Could you apply those? You definitely can. You definitely can. Once you learn this little song and dance, you can apply these in many different situations. So as we go higher, again, same idea. I won't go over the whole thing right now again because you guys learned it before. But traps on the way up, right? 1, 2, crown reversal. Right? Bull trap on the way back down. And again, right? Prior resistance becomes support. What do? We trap those bears in. We let them get short. Everyone's a buyer down there, right? And we blast them back up. This should sound very familiar. We just talked about this a few moments ago, right? So same basic game plan on the NASDAQ if we do get that acceleration, right? And that rip, right? Up through those highs here. Now, how would I sell? Well, what's the problem? Remember those two questions, right? Two questions. There's always a problem, right? There's no free lunch. So is it momentum or is it location? right? Is it momentum or location? I want to be a seller, right? Again, in this scenario, I want to be a seller. I'm at resistance. We know we've got bears waiting to eat our lunch up here and run this thing back down because 60-minute, right? So location is great, right? Location is perfect. Great place to sell short, but that's all that's great, right? Momentum is not good for the bears right now. Why? Because we're bullish into a trading range. We're rotating off that low. If the buyers get what they want, they will punch this thing to the roof up here, right? So momentum is very, very bullish. Now, if I want to be a seller, right? If I want to be a seller in a bull market like this, I need three things, all right? One, a major turning point, like a previous high, like a major area of resistance, like a pendulum swing, right? Like a trend line, right? I need some turning point, some clear level of resistance, right? That's the first thing. The second thing is I need to give the buyers the benefit of the doubt, right? I have to anticipate these buyers are going to push through. So I have to see what's called signs of exhaustion. Now, in my trade room, we talk about this as we call the 2-try rule. Okay, human beings who make up the entire markets, they also program the computers that trade these markets, right? Human beings are creatures of habit, and they will do things twice before they give up and go in the opposite direction. It's one of the core fundamentals of the financial markets. So when we go back to retest this high, I have to give the buyers the benefit of the doubt and expect them to try at least twice to keep it going, right? So we wait for the buyers to try once. We wait for the buyers to try twice. Now remember, buyers want to buy low. So we have to go out and get a lower low in price. It's very, very important we get lower lows in price. All right? That's what signals now signs of exhaustion. So buyers pull it back. They try to keep it going once. Right? They fail. Okay, let's buy some more. As the price goes lower, more buyers will come in and enter the market, and they'll try again. Once those buyers have tried twice, okay, now we need the third thing, and that's a catalyst. We need a stop run, right? So again, first thing is we're at a level of resistance. We're at a turning point. Right? We don't just pick reversals in the middle of nowhere. We have to be at some major objective like a retest of the high. The second piece of it is signs of exhaustion, because again, we have to respect the momentum we're dealt with right now. We can't assume this thing will drop down, right? So we wait for the buyers to try once, try twice, and tire themselves out. Empty their clip, right? Empty their ammunition. Okay, then once those buyers are in, now we know where their stops are, right? Now we know where their pain is. Now we know where those buyers become sellers, right? And again, like I mentioned earlier, look for areas where everyone is a seller, and this now is one of them. Now again, because we have that overall bullishness on the 60-minute, a crown reversal pattern is going to be the one setup you can trust off of this high. Be very careful forcing these trades. And again, these are those half-size positions, those quarter-size positions, right? The counter trend positions. Buyers once, buyers twice. That's one way to short off the high right now. Now, we may not get that pattern set up. A lot of times what happens is the market will double top and it will begin to run right back down again. So what happens if we don't get that short, right? What happens if this thing starts to roll over and starts to run and run lower? Now, ask that same question again. How is location and how is momentum? Momentum is a lot better now for the bears, but how is location? It's horrible because now we're at levels of support in an overall bull market. See how I said before, there's no free lunch, right? You're always either battling momentum or you're battling location. Okay, and if you don't have that battle, something is wrong. You're missing something. There's always a trade-off between location and momentum. If you understand that core principle, you are so far ahead of every other trader in the market. And those traders are trying to pick your pocket and eat your lunch every day. Now, as we roll lower, right, momentum turns over now. Where do we think the bears want to go? They're going to want to take out some of these lows here, right? These big lows. Now, momentum's good, location's bad. How do we avoid selling low? You know this, a trap. We look left. Now notice how I do this. I'm going to draw the channel off the lows, right? Draw it right off that low, ultimately because that's the only option you have right now. Take that trend line, copy and paste up top here, and all we're going to do is look left, find some prior swings, and don't miss that first test off the high. Now, you guys know me. I love traps, but this could be any one of the entry patterns, right? It could be a buyer failure pattern. It could be a pullback combination. I'm going to keep it simple right now, but that's the general idea behind it, right? I would love to go up buyers once, buyers twice, and shorten the stops, but who knows, right? News comes out. I have no idea what this market will do once we open up, right, tomorrow morning. And so if it just jackknifes off the high and begins to run going lower, right, the way you short that is you draw off the low, up around that high, you go looking left, and you wait for that signal, right, coming off the high of that channel. And if you don't know what the signal looks like, grab that link up there in the upper right-hand corner, learn those rules. You can thank me later for it. You'll quickly open your eyes to the best ways to time those entries. And again, we have a pretty good idea of where the market would want to go at that point. So that's the way in which we look, right, to short it. One thing you want to kind of keep in mind, one variation of that, if I can go one step further, would be if we were to get a crown reversal off the high, and then let's say, for example, the market simply dumps, right, and crashes back down. We then take out that big low. Okay, easy target, by the way, that low right there off that high. What do you think the odds are now that we roll lower, the bears come in, they foolishly begin to sell right into support, and we trap them in with that kind of breakout pullback style trade we talked about earlier, and right back up again? That is something you also want to keep an eye on too. Now remember, this is a very different scenario at this point, right? The bears got their short off the high. They didn't roll over and begin to grind down, right? The grind down is the giveaway on that rolling over. So keep your eyes on that, right? That crown reversal, again, half size, quarter size, right? Keep it small, going against. And then as we start to make this run back off that low, we're already overall bullish, right? Overall, momentum will be pretty strong though as it collapses. So treat those bears with respect, right? Respect those bears coming in. Let them try a couple times and light those stops up for that run right back up to retest those highs. All right, guys? So now you know more about how I'd like to short this thing. And the same thing goes for the S&P too. Remember, the S&P is almost identical in this situation, right? We go up, trap those buyers in, crown reversal off the high, or it rolls up, begins to nosedive, grab that new channel, hit that trap, right, and finish off the job from there. And again, don't be afraid here. Once we take out those lows, bears once, bears twice, back up, buying off support. Guys, that's the game plan for tomorrow. And again, like I mentioned earlier, with big news peppering throughout the day tomorrow, there will be some curveballs tomorrow morning. And that's exactly why we'll get together in our trade room and we'll trade this stuff together, because it's a pretty good plan of action tonight. But the markets love to surprise us right now, don't they? So tomorrow morning, 8 o'clock Eastern time, be there with us in the trade room. I'll put all the membership links you guys need to get access to our morning trade room. I'll put the free classes links. I'll put everything you need down in the description of the YouTube video. If you need any help getting in or any questions about the classes, don't be afraid to call the office or use live chat. I'm always here to help out every step of the process. All right, guys, thank you so much for watching tonight. Hope you learned a lot. We got an exciting day coming tomorrow. Hopefully, I'll see you tomorrow morning in our morning trade room. If not, same time, same place tomorrow night, and we'll get ready for Reaction Thursday. Guys, my name is Joseph. Be well, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.